what you need to know about the Payment Protection Program loan forgiveness, or the PPP loan forgiveness. So you received the loan, but you're not exactly sure if you spent it correctly. Now, based on updates as of July 1st, the making of this video, you might still qualify for loan forgiveness or partial loan forgiveness, even if you didn't meet the requirements during the covered period. My name is James with PushPress, and we've spent countless hours researching the PPP loan forgiveness requirements. In this video, I'll show you the main aspects of loan forgiveness that might increase your forgivable amount. As a note, any information given here is given with our best interpretation of the guidelines set as of July 1st. As always, make sure to consult with your accountant before spending any of the PPP money or applying for the PPP loan forgiveness. Before we dive in, let's go over some of the main requirements. Make sure at least 60% of the funds received are used for payroll expenses. This can include salaries, wages, or employer-funded benefits. Now, at maximum, you should spend 40% of the funds on approved non-payroll expenses. This can include rent, mortgage interest, or utilities. You must maintain the same level of headcount, meaning number of employees, as well as employee compensation, meaning each of those employees are paid the same amount that they received prior to February 15th. This just means you kept the same number of employees and you compensated them at least 75% of what they were receiving prior to February 15th. Now, what happens if you didn't meet the requirements? Let's work through some scenarios. Let's say you couldn't maintain your headcount, meaning you couldn't maintain the same number of coaches, trainers, staff members on your payroll. Maybe your doors were closed. Under the latest guidelines, you now have up until December 31st, 2020 to restaff to the same level of headcount you had prior to February 15th. Previously, you only had 8 weeks to do this from the time that you received the funds until you needed to meet the requirement. If your headcount decreased by any amount, your forgivable amount will decrease by that same percentage. Meaning, if you start at 100% of employees and you can only maintain 60% of them, well, now your forgivable amount will decrease by 60%. Now let's say you couldn't afford to keep paying your staff members the same. You can keep them hired, but at a reduced rate. I get it, members were scared. They might have put their memberships on hold, which decreases your revenue, but you still have rent, utilities, and payroll to cover, but there's less to go around. So maybe you decided to pay rent first, which is understandable. You want to make sure you have a place to operate your business. Unfortunately for your employees, this means there's less money available for you to pay them with. So you decrease their pay. Under the most updated guidelines, you now have until December 31st, 2020 to prove that you reinstated their pay to at least 75% of what they were receiving prior to February 15th. Previously, just like with headcount, you had 8 weeks from the time you received funding to meet the requirement. Now you have until the end of the year. Now let's put some numbers here so it makes a little bit more sense. Let's say you're paying an employee $1,000 per month, just to keep it round numbers. That would mean your requirement is to pay them $750 per month. But due to decreased revenue, you can only afford to pay them $500 per month. This leaves a difference of $250 to meet the minimum requirement. That same $250 will be deducted from your total forgivable amount. Let's look at a different scenario. Let's say you offered to hire someone back, but they rejected your offer. Maybe they were not ready to come back to work yet. They didn't feel safe yet, which is fine, but this also still affects your total headcount and your ability to meet that requirement. Should you be on the hook for this? Probably not. If you could provide written documentation that you provided an offer and that staff member rejected your offer, then that reduction in headcount might be exempt. Let's look at one more scenario. Let's say you had to fire an employee. It's a sad reality, but sometimes it needs to happen. Or an employee voluntarily requested to resign or operate with less hours. Again, maybe they had financial or family commitments at home. Again, they weren't maybe ready to come back to work full time. There's a bunch of reasons there. But point is, that decreases your headcount and could possibly decrease your level of compensation. Again, both of these would prevent you from meeting the requirement. Now, as long as you have written documentation of just cause for firing that employee, or again, written documentation that the employee voluntarily requested either to resign or for reduced hours, then again, that decrease in headcount or in compensation can be exempt from you meeting the requirements. So what happens now? Well, first, make sure you document everything. Do everything via email and in writing. The more information you have documented, the greater likelihood you have the supporting documentation to show that you met the loan forgiveness requirements. Secondly, once you've finally exhausted your PPP funds and you feel like you've met the requirements for loan forgiveness, you can submit your application for the PPP loan forgiveness through your PPP lender. There can be a few different forms, but I would still consult your lender to make sure that you are filling out the correct required forms. Now, obviously, there are a lot more requirements to this than just the 4 things I listed. To get a comprehensive list of all of the requirements, visit sba.gov. Requirements have changed a few times in the past, and there's always that likelihood that they may add some changes in the near future. So it's best to make sure that you always look at the original source for the most up-to-date information on the requirements. Also, make sure to join our Gym Survival group on Facebook. Now, this is a collection of gym owners and studio owners where we share information and best practices and all the research on ways to help your business navigate this coronavirus. I'll include links to both below. If you have any questions or comments, make sure to include those in the comment section below. Good luck, and thanks for watching. Hey guys, thanks for watching. If you like what you saw, make sure you like our channel, subscribe, and check out our other videos right here.